Hey, I'm David Barry. Thank you guys for listening in and tuning in. We've got some good news, we've got some bad news, as always, every week. But let's get into it. You don't have another hurricane coming your way, do you, Terry?
It's been a dull weekend. Why not just get ready for a category three, category four? I'm here in Orlando, and we haven't had high winds in about 20 years, so it's going to be an interesting week, but that's okay. And my house is built for hurricanes. Every house in Orlando or in Florida is built for hurricanes. I feel bad for those people on the coast. That's the rough part.
And the guy that has perfect weather 365 days a year. How's the weather out there, Monty? Good morning.
It might seem that way, but we are the hail capital of the U.S. We get more hailstorms than anybody. Right now, there is not one going on, so we're good.
Monty, please tell me that there are no hailstorms or storms coming in on the financial market and what's going on. Let's dive right in. What's happening with the market?
Yeah, well, it's been a crazy week. Rates have gotten significantly worse than what was expected. This has continued to disorient people as the Fed cut rates on September the 18th, but they didn't cut mortgage interest rates. And that also continues to be a question that I'm getting emailed, texted, phone calls. Hey, man, you must be killing it these days with mortgage interest rates getting slashed. And I have to explain that's sadly not the truth. In fact, it's the opposite. When the Fed cut the Fed funds rate, which is the rate at which banks can borrow overnight on September the 18th, rates really just started to go up. And so I'm looking at the chart here, and it has happened every day. And what started happening last week then was it got significantly worse. We really went off a precipice and started going up on those rates. And so the reason for this is a lot to do with the jobs. And so the Bureau of Labor Statistics report, that BLS report, we talk about it every month when it comes out, that reported that there were 254,000 jobs created in September, which was well above what they had estimated at 140,000. They also positively revised July and August up even higher and put in 72,000 more jobs to those months combined. And so the unemployment rate actually fell from 4.2 to 4.1%. That report had a really different tone than the softer labor sector data that we've been seeing in recent months, and it showed strength on multiple fronts. In addition to that overall beat in job growth, the number of full-time workers rose about 414,000 after declining in August. The average hourly earnings also came in above the estimate. So you got to note, though, that September's headline job growth figure will be subject to revisions in the next two reports. So, we'll have to see. Was it really 254,000? We're just going to have to hide and watch here. We also know that there's a very important election happening in a month. And so all bets are off as to what's really going on right now and how much of this is political, how much of the reporting is being skewed in a certain way. So rates are going up right now. That's really disappointing for all of us. Nobody benefits from that. None of us. I don't like it. The Leaving California group doesn't like it. Nobody likes when rates go up. So unfortunately, with that data coming in, it just changes the way that the market is heading for right now.
Well, Monty, when you say that, when you say it's bad, I
Mm.
don't know what it's bad. What when a lender says it's bad, that even sounds worse than a consumer. But I know
Right.
for us as realtors and the consumers, that what's bad is when you take your $2,000 a month payment and turn it into a $2,500 a month payment. But maybe you could put it into perspective with numbers, like you talk about
Mm.
the interest rates. What is bad? Did it go from
Yeah.
7% to 9%, or what?
No, definitely not.
Yeah, yeah. So
Thank you
maybe
for
you could
that
explain that.
clarification.
Yeah.
Yeah, thank you for that clarification. No, when I say bad, it means we lost all the gains we had in August and September. In August and September, we were seeing a lot of growth and a lot of good things happening with people buying homes, with rates trending downwards, with the big announcement that was coming September the 18th. We saw a 1% drop in interest rates leading up to that. That's what we've lost. We're back all the way to where we were at the end of July. So it's about 1% higher than it was on September the 17th. And so to take a 3 week period of time and raise interest rates a whole percent, that's a lot. Now, granted, it's no worse than it was at the end of July. So it's not shocking. It's not higher than they've been or anything like that. We're not higher than it's been. It's just disappointing. As soon as you thought you were making progress and we saw rates drop 1% for them to go right back up a whole percent to where they were, it's just disappointing. But the overall trajectory is still going to be lower rates. We still believe, and the Fed does too, that they will cut interest rates on, not interest rates, they'll cut the Fed funds rate, which will lead to lower interest rates. It really will on November the 7th. So I would say you've got to batten down the hatches and get ready for this election. And we're just going to have to hold on until that's done. Once it's done, I do believe we'll see some settling and some stability.
Well, Terry, and by the way, for those of you that are watching for the first time, Terry Gilliam is our founder. He's the one that's created our groups, and we have almost 300,000 members. So again, I want to thank you guys for tuning in. But Terry, what are your thoughts when you hear all this?
I have a couple of thoughts. First of all, Monty, you can confirm this, but I believe when I was in the mortgage business 20 years ago, I would tell people to watch the 10-year Treasury. Mm-hmm. And that would be giving them a better indication of the direction of interest rates for mortgages, because they're competing for the same money, not what the Fed is doing as far as cutting interest rates. The Fed only controls what they're doing with banks, whereas the 10-year Treasury and mortgage interest rates or mortgage-backed securities are competing for that money. So if you see today, what is today? The 7th, October 7th?
Mm-hmm. Yeah.
The 10-year Treasury is over 4%, where about a week ago it was close to 3.6%. No, that's not the interest rate.
September the 17th, it was 3.6.
Mm-hmm. Okay. So that's what you should watch if you're interested in seeing the direction of mortgage rates. The other thing I would say is I think they should take out the L in the BLS. I think they should call it a BS job report, because with the 800,000 job adjustment down in July, these guys are amateurs in a very sophisticated market. You can't have an 800,000 job decline that we said, oops, we overestimated by 800,000 jobs, and then come out this month and say, oh my gosh, look at all the jobs we've created, and only to come back 6 months from now and say, you know what, we completely blew it. We actually lost jobs. Anyway, my point is that take these job numbers with a grain of salt. Unfortunately, the investing market takes them very seriously, and they adjust their investments based upon what the numbers are, in spite of the fact that we know that these numbers are BS. So that's my point on this. So just strap in and hold on tight, and let's see where these things eventually go.
Well, as a licensed realtor, I have told clients before that right now might not be the best time to buy. It might be better to wait. But I don't do it at the volume that Monty does. And remember, Monty is a national lender, so he deals in all 50 states. And Monty has actually said on our show multiple times, it might not be the right time to do this, or it might be the right time. But what it's never the right time for is to not ask the questions. So Monty's going to be straight. I'm going to be straight with you. We're going to definitely look at the numbers. But for you to do nothing is probably the worst thing you can do. But to get the advice and to figure out and to really see it on paper and see what it looks like. Monty, can you address that a little bit as far as whether it's now, and you just actually said it on our show again, you might want to buckle up and wait till the end of the election, but can you just touch on that again, Monty?
Yeah, it may not be the best time for everybody to buy. I still think it's a great time to buy in general, because home prices are still going up. We got another report this past week, and it confirms that appreciation data is going up and up and up. So that's a good thing, but that doesn't necessarily mean now is the perfect time to buy for you. We really need to have a conversation to confirm whether that works for you or it doesn't. In most cases, you're in a better position than you thought you were in. There's more options out there for you. The other thing that I think we've got to consider is the American public is in a much worse spot than what these numbers would make it sound like. When you see a lot of jobs created, doesn't necessarily mean that there's happy families behind it without having tons of credit card debt and things like that. And so another thing I wanted to share was the latest JOLTS survey that we got. We saw an uptick in August's job openings, but that's really not the whole story. That JOLT survey, that stands for Job Openings and Labor Turnover Survey, that showed that the job openings rose from 7.7 million in July to 8 million in August. The hiring rate fell to 3.3%, which is the lowest level since 2013, not including COVID. The quit rate also fell to 1.9%, suggesting that there's less poaching from other companies and fewer people feel confident about finding new employment. So what does that all mean? What's the bottom line? Well, while the increase in those job openings was unexpected and above the estimates, the total may be weaker than what that headline suggests. The rise in the remote work has led to job listings being posted in multiple states more frequently. So you got, doubling up there, plus that low hiring and quit rate. Those do suggest that some labor sector is softening. And that's also reflected in that latest job cuts report that we got from a firm, Challenger Gray and Christmas. They're the ones that released that. So the hiring announcements are also really important to look at. The hiring announcements fell to the lowest level year to date since 2011. So I would say it's not what it seems. This is not a happy family moving towards Christmas Day. There's still highest credit card debt that there's ever been right now. People are in a bad spot. Even my barber last week, as I was getting a haircut, said, man, I just feel so bad. Nearly everybody that sits in my chair talks about how much credit card debt they're in and they're drowning. So we are here to help, but you have to reach your hand up out of the water and say, hey, I need help. So we three men are wanting to let all of you know what's really going on, and we're trying to temper as much as we can these reports so that if you aren't feeling like what the news is saying, there's a good reason. You have a lot of people that are with you that are also in your hard spot and need help, and that's what we're here for.
Well, here, Terry, Terry, I hope you're sitting down because I'm going to get political, but I'm not going to get political. So it's going to be an interesting political twist here. And I want to get your take on this, Terry. With all these celebrities that are endorsing either one president or the other president, I'm not a celebrity, but I think I am on this show, actually. But the thing is just go vote. Go vote. We really want you to vote because things are crazy and we're not endorsing anybody. And we hardly really do talk about politics, but please, I'm asking you nicely, go vote. Let's make a difference. And hopefully things are going to turn around. Terry, what do you got to say about that?
Well, I would agree with that, David. If you want more freedom, lower taxes, higher, better jobs that are brought back to the U.S., go vote for the people who are promising that, not the people who are promising higher taxes and to punish the job producers of the world. That's how I feel about it. I'm certainly going to vote my conscience. I'm glad I live in a state that also feels a lot that way in Florida. But yeah, we definitely want people to go vote. And you want to make sure that someone didn't vote in your place, by the way, because I know that happens a lot in California. What do you mean I already voted? If I'm standing here, how can you say I already voted today? Oh, gee, that's why they don't want voter ID. Don't get me started. All right.
All right. And Monty, in closing our Money Matters show, because it does, anything in closing that you want to say?
Just what to look out for this week. We're going to get some crucial inflation data on Thursday. That's going to be the Fed's favorite measure of inflation, CPI, for September. We're also going to get the producer price index, PPI, that measures the wholesale inflation. That's going to come in on Friday. And then the latest jobless claims were also going to come in on Thursday. So Thursday and Friday of this week, we're going to see some interesting things happening. And so next week's Money Matters show should be really, really informative as to where we're going. And with each week we get closer to that election, it's going to be something to watch.
Well, thank you all for tuning in. And again, please subscribe to our channel. If you like this content, please share it with your friends. And I hope you have a great week. We'll see you next week. Have a good day. Bye-bye.